It is time for a quick and sharp update on the markets and on Tesla, our favorite AI stock, as well as on some other things to understand where we stand and where we go from here. I will update you also on the Pioneer Alpha current situation of the portfolio, where we are at and how we go about this week. So first of all, we see when we look at the international headlines and the macro situation of the markets, let's start there, that you see that we are continuously basically hanging in the balance between the Iran and US war and what is happening here. As I said a long time ago, multiple weeks ago, this was over. Why is the war over? Because you always have to reason from the interests of all parties involved. Iran cannot afford the blockade and going on with this war. It would be a disaster for Iran. The United States can absolutely also not afford to escalate this war. It would be a total disaster for the United States. There is a stalemate, but in the sense that both sides now have to find a resolution and no one can get out of it without catastrophic effects. So that makes me very confident that we are actually not at risk for escalation, even though the headlines might imply this from time to time. But that is why I was not nervous at all once I realized this is over. And what you see is when you look at the markets agree. The markets were actually smarter than I was, and most other people I heard were, because the markets went up a lot for the whole month of April already. You see today, futures are up 0.76%. They don't even care about these headlines. There was some rumors or news that the US has attacked some ships from Iran, but don't chase the news. Think about what is actually happening and what is the interest and incentive situation for the Iranian regime and Trump. Both are stuck and need to get out of this as quickly as possible. An escalation would be catastrophic for both sides. Therefore, we can rest assured, in my opinion, high certainty, high confidence that this is over and we can keep ignoring it, which means we remain sitting on a coiled spring for the markets because of the AI revolution that hits hard semiconductors. Of course, it hits hard, positively hard, the Mag 7, and they look very, very good. Tesla, of course, is a special situation. Tesla is the one Mag 7 that is not getting a giant boost on earnings because it is structurally different from the other Mag 7 stocks. NVDA gets boosted through the roof through its earnings. Google boosted through the roof. Then you have some hiccups with Meta and Microsoft that are just buying opportunities because the underlying facts of these stocks are also tremendously attractive. And the one laggard, if you want, so is Tesla, that of course is in a totally different category and is not in the moment scaling its profits and EBITDA like the others. But it has one or two giant aces up its sleeve. It is the only one of these big ones that has major new revenue and margin streams coming up that will eclipse everything else once they work. You know the story, Robotaxi and Optimus. If you look at Robotaxi, Tesla, you see tremendous progress. Here's the Robotaxi tracker. I don't know who follows that in real time. I do. We now have 36 unsupervised Robotaxis. A lot of doubters and bears say, that's ridiculous, Joe. What are you talking about? Waymo has 100 times, a little less than 100 times already, like 90 times that. They have 3,000 Waymos out. We were promised hundreds of millions of Robotaxis and you had 36. This is ridiculous. But of course, we need to understand this is a technology that once it works can roll out millions and tens of millions of autonomous vehicles that take over everything, plus millions or thousands or hundreds of thousands of trucks, of semi-trucks. I just had a video out on that take over trucking, which is an even bigger opportunity than ride sharing, of course. And that is why it's worth watching this. We are watching and seeing and observing autonomous Robotaxis driving around now, completely autonomous, not like Waymos with some hacks and some LiDARs and some people manually adjusting everything all the time. These are real Robotaxis with real autonomy and real visual sight that actually understands the world. And so we see now Houston and Dallas growing rapidly on a low basis, but rapidly. And we see the unsupervised fleet in Austin, Texas. So these are all Texas places growing like crazy. And if you continue on that growth path, of course, we will exceed Waymo. We will exceed these 3,000 Waymo Robotaxis massively by end of the year. I mean, at that rate, we would be at whatever, 100,000. But of course, we cannot extrapolate from here like that. You know my estimation. I think we come out above 10,000 Robotaxis end of the year, which in my opinion drives the stock above 1,000 because of momentum. I can't predict that cleanly, the 1,000, but there's a very high chance if we actually get to multiple thousands of Robotaxis at a high monthly growth rate that the stock will actually reprice and end up above 1,000. Maybe not end up, but shoot over 1,000 and then fall back. We will talk about this when we get there. So what happened to Tesla stock? Let's get right to that. In that bigger macro situation, if you follow the channel, you know I said it's going back to 400 in no time. Some people said I was crazy, but I was right and cashed in on it. I will get to this in a second, how we actually execute and engineer the right investment and trading strategies. Investment for the long term, trading on the tactical short term. So we are back to 392. It's now pre-market. You probably see that video when we are already trading today on this beautiful Tuesday, May 5th, Cinco de Mayo, if you're like the Mexican celebrations of whatever that is. I don't even know what it is. Dead people, something like that. And we are now at 395, beautiful, perfectly on plan. And we went up from down here. We hit actually after earnings this ridiculous low of 369 in the 360s. I said this goes back in no time. My perspective now is when you look at and zoom out 6 months, we hit all-time highs. I will repeat myself again at 490 December 16th here, 490 December 16th. That level reflects the willingness of the market to cut Tesla some slack, give it some bonus on top of whatever it's worth right now based on cash flows, because people believe in Robotaxis and Optimus. So I take that seriously as an all-time high marker. The markets are already above their all-time highs, the NASDAQ. In my mind, here's how I think about technicals like that. I'm not a chart astrologist, so I'm not gonna do all these lines. I don't really believe in them. I'm not mocking these people too much, but it's not how I do things. I use these all-time highs, for example, as a marker to understand that's where the market thinks in good times without Tesla delivering the goods, yet where Tesla should be. Okay? Now we are a company that is much stronger than December 16th, that has proven dramatically more. FSD's out, unsupervised is out. Okay, Robotaxis are out in the open and Cybercab has started mass production and the Tesla semi-truck is also out. So Tesla in every respect is a stronger company. Should we be at 490 right now? Right now? Sorry. Yes, absolutely we should be at 490 and I think that is my target right now. If Tesla does not deliver some crazy scale for Robotaxi, 490 is where we should go next in no time. In no time. That is how I see it. If we would get to 490 as the company stands now with, let's say, under 100 unsupervised, I would get very cautious. I think there will be a pullback. But down here, we need to go back up there on a pure logics perspective where all-time highs were, where the company was, where it's now, and where the market is. So that gives me good confidence that we can have a little bit of a bull run and continue this bull run. Let's get to execution. Okay. We are finishing off a beautiful week. Okay, here are the results for the Pioneer Reserve and Pioneer Alpha. So in my portfolio, we are up 9.41%. Let that sink in. 9.41%. That is as of last Friday, May 1st. Why so much? How did I nail a 9.4% upside move of the entire portfolio? Tesla was up 3.86%. Went up to 390 from the C60s. Here you can see the power of predictions and confidence that is actually adjusted to the actual underlying probability. It was very clear to me in the 360s, this is ridiculous. We had great earnings. It dropped because Elon didn't have enough energy in the call or whatever. It completely bogus. But the facts are on our side. The market is on our side. And the midterm trend to 490 is absolutely on our side and the fundamentals are on our side. So that was an example how you can have high levels of certainty. If you have high levels of certainty, it's important to nail down what exactly is your certainty. My certainty was We are going back to 400 on a very tactical short-term basis. Okay, and that I said it's going to happen last week and this week. We are going back to 400. I have extreme levels of certainty about that. Are we going to 410 or 420? I don't know. I have less certainty on that. Are we going mid-term to 490? I have reasonable certainty. Quite sure we do, but my certainty that we will go to 400 was vastly higher. Okay, why am I elaborating on this? Because that performance is pretty impressive. I'm very proud of that, and it's already looking very good yesterday and today. So we'll get to this end of this week how we continue the performance. But if that's the case, why did I squeeze out so much, or how? Well, let's go here. We'll go to the 5-day trend. I knew what's going on here, and what I do in these situations. I don't buy calls. I keep always my core position, which is significant. Core position is probably around right now. Well, we went up so much. It's right, 50% of the portfolio is roughly Tesla. A little less actually. The rest is MicroStrategy, Robinhood, and NVDA. More or less evenly distributed because I shifted from NVIDIA into Robinhood after Robinhood crashed like crazy. I was very tiny Robinhood because I love the stock, but I didn't feel it. Then it dropped so much also on stupid news. And I said, that's the time. NVIDIA went up a lot. So I shifted NVIDIA into Robinhood. Now I'm nearly even. I think MicroStrategy is now the biggest because it went up so much, but I'm not getting out of MicroStrategy. Each of these positions is probably, let me think, it's probably less than half of Tesla, each of them. So it's probably around 10%. No, it's a little bit over 10%, 15% maybe per position. But don't forget, you're not limited to 100%. It's hard to calculate what the exposure is based on options deltas, but I'm clearly vastly over 100% invested right now through the tactical strategy. So there you have my core positions or my stock positions. Tesla 40 to 50%, the rest 15% MicroStrategy, Hood, and NVIDIA. That's how that looks like. And my main power, my main return power on the weekly level comes from options. So the option structure is fully focused on Tesla. I don't do anything else right now because it's not obvious to me. In order to do option strategies, I need extreme levels of certainty because options are dangerous. I need extreme levels of certainty, and certainty means what is the direction I'm certain of, how certain am I, and what is the exact timing. So you need to think this through. I have extreme levels of certainty, 90% plus, that we go up. I have also sufficient certainty that we go towards 400. Then I think the tail risk of a drop low because the global situation is not that risky. I think Iran is well under control. It's well understood. Very little surprises. The entire oil disaster, also no surprises. Ukraine, no surprises. I think I understand Putin pretty well, that he's not going to nuke anyone out of nowhere, right? So I don't see too many black swan event things. Of course, we need to watch out, and that can change any minute, something new coming up. But we also know the world is a little exhausted from macro risks, which is good. It's going to react slower to any kind of macro risk once it's exhausted and constant attention on Iran. So that buffers risk a little bit psychologically. So I don't see too many surprises. And what does it all mean? I'm not doing calls because the run up here to 400 would be minute, right? That's not a good call situation. I don't like being long options because the clock works against you. Every time you're long options, any kind of delay of your thesis and even sideways, even the right directional move that is too weak costs you money, right? If you have an out of the money strike price, the stock doesn't move really, or it even moves up and you have a call, you still lose money if it's not fast enough because of the time decay. So I hate that whole situation. And the fact that I hate it makes me do the opposite, and the opposite I love. The opposite is you sell puts, for example, because then the premium works for you. For example, if I have extreme confidence we go to 400, extreme doesn't mean 100%, of course, then what I'm doing is I'm selling at the money puts, and a lot of them. Because if you sell 392.5, it's nearly exactly at the money, or 395 if you want to be a little more aggressive, you get on a 1 week basis, you get $10, right? If you sell a 392 strike price at the money put weekly, expiring in 1 week, in 7 days, in 5 trading days, you probably get $10. So you get $1,000 per contract. If you sell 100 contracts, you get $100,000. So let that sink in. Of course, you need a bunch of margin for that. But if you sell 100,000, you get $100,000 worth of premium here. If you sell 100 of these contracts, And if Tesla goes to nowhere, if I'm actually wrong and it doesn't go to 400 and ends up exactly where we are now, it goes completely sideways, you made $100,000 in 1 week. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support, and let's get back to the video. Okay. If it goes down, if it moves against you, if I'm actually wrong and it goes to 387.5, I get paid $50,000 for being wrong. And if it goes to 400, of course, I get 100,000 paid. So I like that much more than going to, let's say, a 405 or 410 short put, where you have more upside, right? If it goes to 410 and you have the 410 short put, of course, then you're rich. Because then you're not getting $100,000, you're getting $250,000. But is that good? Is that smart? Well, you're taking massively more risk, because if you then are wrong and it goes to 385, you lose money. You lose a lot of money. And I don't like that. If I go to 385 from here, I still make money. So going at the money or out of the money buys you much more buffer to the downside. And one thing is key, always bias yourself to the risk and downside. You have to protect your money. You have to be greedy if you want to generate alpha consistently, but also protect your money. I rather, make only 100,000, but buy me these scenarios. Sideways, I make the full amount. Down, I am likely to make money. And if it goes to 410 or 420, I need to what's called stack, what I call stacking. No one calls it stacking other than me. I call it stacking, saying, okay, I don't want to miss out on this. If it goes to 400 quickly and then 405, and I'm down here and not making enough money with it, I start selling more puts. Not necessarily closing the old ones, depending on my risk assessment. That's how you can make nice premiums, and that's my strategy right now, and I keep that strategy up for now. Let's see what happens. The risk is if it goes to 420 very quickly. At some point, you have pullback risk. And pullback risk is not good for short puts. So if you run up to 420, you should double think. You don't want to necessarily, unless it's driven by real Robotaxi scaling and it's going to go much higher. But if it goes quickly to 420 for no good reason, not smart to sell at the money puts at 420 right then, because then it drops back to 410, you lose money. Needs to be adjusted, but right now, Goldilocks moment, because I think we have way upside from here. So the risk of a major drop is just very low, in my opinion. Again, you need to watch that minute by minute, because if something happens in the world, it changes. And so that is the strategy that leads to very nice alpha here. Year to date, we are up 12% versus S&P 6% versus Tesla 13%. That's how things work right now. So I'm very happy about that. Go to pioneeralpha.org, by the way, to check out the bonds and everything. You can read more about how we actually manage this whole thing. And that is the situation. Here you can see the current reserve. We actually are at 98% of our 2026 target already. 98% of the 26 target. This is a longer term target from 2024 to 2026 to actually reach a 30% CAGR. That is our lower end objective long term, and we are at nearly 30% already for end of 2026 with the current amount of gains. We are tracking the Pioneer Reserve very closely. Everything I'm doing here is not just randomly to make a little bit of money, but we are building the infrastructure and the financial foundation of Pioneer Lands. To convert the upside of the age of AGI into consistent 30% plus returns is the mission and objective. Not a promise to investors, of course. It is a mission and the objective that we are dedicated towards, that we have nicely achieved over the last nearly 2.5 years, and that we intend to exceed in the future without promising anything, of course. So follow us here, check out pioneeralpha.org, and we will have some more fundamental-oriented videos on space, on Robotaxis, on Optimus coming out this week. I hope that was interesting for you. And see you very soon.